2부 첫 순서는 해외 연사의 주제 강연이 영상으로 준비가 되어 있습니다. 이스라엘 테크놀로지 솔루션 코파운더이자 파트너이신 요시 코닌의 강의를 전해 듣도록 하겠습니다. 발표 주제는 NFT, 메타버스, 블록체인 기술의 글로벌 트렌드입니다. 함께 보시죠.
Hi, my name is Yossi Konijn, and I am a partner at Israel Technology Solutions in Israel. It's a real honor for me to speak to you there in Busan. I only wish I could be there in person, but regretfully, with COVID-19 and all the mess around it, that is not possible. Let me start by introducing myself. I am a blockchain enthusiast. I have been dealing with blockchain companies for over 6 years now, and have been following the distributed apps and DeFi marketplace very, very closely. So, what is it that we do at Israel Technology Solutions? We connect. We connect global ecosystems like the ones in South Korea and Busan to the Israeli technology ecosystem and the companies within it. Being at the core of the Israeli startup nation and seeing from the other side the needs of international organizations, at Israel Technology Solutions we have a very wide exposure to what is happening both in Israel and outside of it. As such, the focus of this talk will be the trends we see in blockchain technology as a market and in the DeFi field specifically. The DeFi field has been very active in the past few months and is undergoing many changes. I will break my talk here into 3 basic components of the blockchain world: the infrastructure, the DeFi apps marketplace, and the NFT space. Let's start with infrastructure. What is happening in mainnets? Mainnets are those blockchains developed by various companies to serve as computing infrastructure on which distributed apps, that is dApps, can operate. Ethereum is of course still the leading mainnet at the moment, but Ethereum is just the beginning and is still undergoing many changes as it moves to Ethereum 2.0. So what are the trends that we are observing today? Well, the first trend is called the base layer blockchain rivalry. The base layer being the mainnet, the blockchain platform on which the dApps run. But while Ethereum, like I said, still remains the most commonly used platform for DeFi protocols, the high gas prices, the network congestion, and the problems of scalability it faces continue to trouble DeFi companies. Looking forward, we have the promised Ethereum 2.0, which claims to solve many of these problems. But until such a time that it becomes a reality, there is a strong case to be made for a new base layer, or many base layer protocols that can compete with Ethereum. That is why companies like Solana, Binance Smart, Cosmos, and Fathom are offering these new protocols that support DeFi app creation, as well as offering new capabilities that cannot be found on Ethereum. Another big up-and-comer that we can show as an example of a base layer protocol is Polkadot, which comes from one of Ethereum's main architects actually. I will elaborate a bit more about Polkadot when we discuss our next trend. In the coming months, we'll see new base layer protocols mature and try to capture market share. And it is obvious that the rivalries taking shape now will continue to plague the market for a while, and until only a few select base layers make the cut and become the bases for the future dApps ecosystem. This brings us to the next trend in the market. With several major base layer protocols, several blockchains serving as a mainnet, there will be a need for some way to communicate between them and easily transact assets from one chain to another. Therefore, I believe the next trend we will be seeing is cross-chain technology. That is blockchain interoperability. Using cross-chain technology, dApps can benefit from other chains or avoid the limitation of a particular blockchain by leveraging the features of another blockchain. Another issue this solves is dividing the load of the whole DeFi sector among various blockchains and finding a way of distributing that load uniformly. regardless of the blockchain infrastructure itself. So like I said, I mentioned Polkadot before, and Polkadot is a very good example of cross-chain interoperability. Not only Polkadot, but also Cosmos and Harmony are now offering these interoperability solutions to other blockchain networks. Blockchain's main chain, the relay chain, allows several different parallel chains access in the form of slots, where they can transfer information and assets to the relay chain, and from there to the parallel chains on the other side of the slot. This enables bridging the different networks and developing bridges that allow the assets to be transferred from one network to the other. Moving on, let's talk about the DeFi market. We're continuing to see a very active and dynamic market that will continue to be influenced mainly by regulation. While new DeFi applications continue to transport traditional financing tool to the chain, to a decentralized space, the regulatory bodies are closing in and setting boundaries on what can be decentralized, not always fairly. Just recently, a new Chinese regulation is prohibiting any cryptocurrency activity in China and was feared to have dealt a harmful blow to the DeFi world. But looking back, and with a bullish DeFi market in the rest of the world, it still hasn't made much of a difference. Examining the trends that will change the DeFi sector, it is obvious that the main issue is still, and probably always will be, liquidity. Therefore, I think the main trend continues to be development of liquidity tools like liquidity mining. Automated market makers such as Curve Finance, for example, are now providing liquidity mining as a service. Why is this so important for the DeFi industry? Well, it takes a while for a new technology, a new application, to get to the critical mass that is needed to sustain itself within its own community. What these companies need in order to reach that point is somehow to reach people who can assist them with things like mining of assets, asset staking, and market making in order to provide liquidity. Hence, new startups are establishing to offer new ways of liquidity and to ensure, for example, that the distributed exchanges are able to offer fast and low spreads with low slippage and ongoing liquidation option to the traders, and keeping alive the community until it is big enough to survive on its own. And it's working. We can see that from the constantly growing total value of assets that are locked within the DeFi space. In September, that number reached $100 billion, after which it took a bit of a hit, and now it's climbing back, and it's continuing to grow. And the growing size of the DeFi assets is enabling companies with the opportunities to emulate and transport more financial tools that are currently only available off-chain to the blockchain. That is, of course, the core of DeFi. However, if we want to examine what new financial tools will be the focus in the near future, we can see several major trends. The first is synthetic assets, that is, crypto world's advanced derivative classes. There's a company called Synthetics, for example, that creates something called synths, which essentially mimic the price action of whatever asset or commodity they track. It could be gold, it could be oil, it could be US dollars, it could be the Bitcoin itself. And they offer options using smart contracts. These derivatives, which we know can be a force for good, but also a force for evil to the market, are generating more and more activity and creating a second layer of interest within the DeFi world. They enable people who are not interested in buying cryptocurrencies to deal with DeFi assets. The second trend within the DeFi tools is trench lending. These are products that basically allow lenders to fund more volatile and risky loans by creating a pool of loans and segregating the proceeds to groups of investors based on each investor's appetite for risk. The third trend we see more and more, and this trend is very much dependent on the regulation being available to support it, is decentralized insurance. We're seeing a growing number of these insurances being decentralized and offered on the chain. You have Nexus Mutual and Bridge Mutual, for instance, that offer DeFi insurance. that is insurance against smart contract failures. This enables Ethereum owners to pool their funds in order to provide insurance for other smart contracts. But from these virtual asset insurance products, it's a very short hop to offering decentralized insurance for almost any asset, including physical assets. So maybe in a few years, you will be able to insure your car through a DeFi insurance company. Who knows? Finally, the last trend for DeFi I want to discuss today, and a trend that will help us shift the discussion to NFTs as well, is gaming currencies. This is not a new trend, but has been discussed for several years as the perfect DeFi usage case. However, in the past year, gaming currencies have become a reality and their adoption is expected to continue in the next few years. The ability to move a currency from one game to the other and not be controlled by the gaming company is very lucrative. And since there are hundreds of billions of dollars out there in gaming currencies, the demand is very high. Which brings us to NFTs. NFTs are also being pushed forward by the gaming industries. NFTs, as most of you probably know, are non-fungible tokens. Tokens that are distinguishable one from another and have a unique value for each. NFTs started out as collectibles, with the biggest known usage case being CryptoKitties, but there have been others. And in the beginning, they were a curiosity. Only the really hardcore people and blockchain junkies went into NFTs and bought things like the CryptoKitties. However, in the past year or so, NFTs have been undergoing an evolution. They've been transformed from a curiosity into a legitimate way to collect art that is digital. The ownership of digital art is a huge market and has been a boom to digital artists as well, enabling them to combine digital art and real-world ownership, thus opening the way to lending digital art to people while maintaining ownership, to selling it, and looking forward, it is becoming clear that NFTs will expand to other verticals. If we started with collectibles and we're now in art, the next usage case would be, like I said, gaming, enabling the tokenization of not only gaming currencies, but also gaming assets. Assets such as characters, weapons, skins, and other assets that are available in the game. With NFTs, people can now really own and trade these assets in a way that is secure, decentralized, and cross-game capable. In the coming year, I believe we'll see more and more gaming companies offering NFTs, which will hopefully move us along the track to the next stage of NFTs, which is mass adoption by brands. What does that mean? Think, for example, that you'll be able to not only own your shoes, your Nike Air Jordans, but also have a unique NFT that mirrors your ownership on the cloud, on the chain. You'll be able to trade that, or you'll be able to collect it and have ownership even after your shoes have been worn thin. We'll be seeing brands minting their own NFTs also and selling them online. Take, for example, a Louis Vuitton NFT. It can be a digital twin for a specific bag, or it could be a digital-only creation from Louis Vuitton as artwork or collectible. This will clear the way for additional digital assets and then real assets that make their way over to the chain. However, this is all a prelude to the main event, the promised world of the metaverse, which is what Facebook people are talking about all the time. In the metaverse, we will be able to bring in our property as NFTs, transferring things from the real world into a virtual world we can reside in, and staking them as our own. Think of your office or your home in the metaverse with artwork that belongs to you, with furniture that has been made specifically for you and no one else can own aside from you, and you can also sell it or trade it on marketplaces. So in the coming year or two, I believe we will be seeing more NFT companies aiming to bridge the real world and the metaverse through NFTs. As long as the metaverse continues being trendy and hyped, this will move forward. This will push forward the NFT and blockchain space as well. If, like virtual reality 10 years ago, or other trends and fads, it will disappear, it might be a bit of a blow to NFTs as well. So this is how I see the world moving forward in terms of blockchain, DeFi, and NFTs. I'm very happy to hear from any of you. If you have any questions, feel free to contact me or ping me on LinkedIn. And again, thank you for the opportunity to talk here. It has been a real pleasure. And hopefully see you next time in Busan.